I would say I'm very excited about going into the new year around crypto, and I'll tell you why. And I have to be transparent. You're going to see something remarkable at Davos this year, which happens in mid-January. Each year, that global gathering has a new theme. You know, a few years ago it was global warming, and then it became deglobalization, then globalization. This year, you're going to see crypto at the top of the list.
Hey guys, welcome back to Library of Wealth. Today we have Shark Tank investor Kevin O'Leary, aka Mr. Wonderful, discussing the massive changes coming to crypto. O'Leary has strengthened his multiple positions in the market while moving many assets into a more profitable structure. While he makes adjustments to his crypto portfolio, he advises retail investors to double down on large cap projects such as Bitcoin and Ethereum. O'Leary believes that especially in the crypto market, it is vital to have diversification to account for any and all economic struggles that can cause investments to not recover. He stresses the importance of being first in the current economic climate we're in now, and with the returns in crypto trading, there will be a substantial maneuvering on many projects. Let's check out this interview with Kevin O'Leary as he gives us his position in the crypto market, as well as what we can expect in the next few months. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Where we talk about a ACH transfer between banks or SWIFT transfer internationally, these were private sector innovations decades ago that were heavily regulated by global governments. And for the first time now, products like stablecoins could really disrupt that at a significantly faster, more productive, more transparent, more auditable, but above all, far less expensive system for transferring global assets. And so you're going to see companies like Circle headline at that event. And I think it's going to be, Davos will be all, you're going to see a lot of crypto-based conversation at a global level with global governments as they struggle to find some kind of policy and regulation. And that bill, the Stablecoin Transparency Act, is at the forefront of that. That is a bipartisan US bill that I think could be marked up by the time we get to that place, because it'll be after the midterms on November 8th, which is going to be significant for crypto policy. I think what will happen in the House will help crypto policy. But I think all of this is going to be really fascinating, and why everybody should stay on their toes. Lots of change coming. It is 100% impossible to time the market. 100% impossible. Everybody's tried it. Everybody's had their fingers burned. And I'll give you an example over the last 3 weeks. And so if you looked at 2020, which was an extremely volatile year as we started to understand what COVID was doing to the economy and the global economy, the entire returns of that year, which was actually a good year for equities, happened in 19 trading sessions. 90% of the returns happened in 19 trading sessions. That's 8 hours times 19. Wow. And if you were not in the market that day when it went up 1,200 points or 800 points or 1,500 points or whatever happened in the volatility, you had no returns whatsoever. The problem is which day. And I remember in March, April, May of 2020, when I was in Miami in lockdown and working with my team on our portfolios, our global operating company portfolios, watching us lose millions of dollars by the minute one day, and then the next day watching this reverse of it. Just an incredible amount of volatility. And having seen that movie before, I was able to tolerate it by drinking great Chardonnay and watching the sharks seek the pelicans outside of my balcony, because for the first time in 500 years, no people were allowed on the beach. And the great whites came right to the shore to eat the pelicans. It's never happened before. And that told me we're in a different time here.
With such low earnings, O'Leary sees the dropping value in the crypto sector. He says the economic positions in Bitcoin and Ethereum are decentralized all over the world, so it's not just American investors exposed. O'Leary also discusses how the concerns of a recession are affecting global markets, not just in cryptocurrency, but in the stock and housing markets as well.
I know as an investor, I can't time the market, and we accomplished that market return. Same thing about every other asset class we're talking about. You want to guess bonds? Buy a portfolio of fixed income with short duration under 5 years. Right now, on triple Bs, you can pick up 6, 7, 8% if you have fortitude. And so I am doing that. I'm trying to diversify my portfolio, and that's the only free lunch in investing.
What's your take on how deep this correction can go? You've got some folks screaming we've got a 50% coming, and then the counter argument is this is no 2008, lending standards are too strong. Maybe we're in for a, average 15% correction. Where do you stand?
We haven't seen a 15% correction in any markets yet. There's fundamental demand, obviously, and the consumer remains buoyant. But you're right, we could have that. Traditionally, the real estate cycle used to be 7 years. That has gone, we haven't had a significant correction. I don't care what market in North America you look at, for 25 years, and that's because of change in demographic and demand for housing, both rental and assumed ownership. But real estate cycles are really interest rate sensitive, as you detailed. But these mortgage rates right now are still traditionally very low if you go over a 40, 50-year period. I've been an investor in real estate when interest rates are 15%, 1.5. I've been an investor when mortgage rates were under 4. And so at the end of the day, fundamental shelter and housing and office space and demand, industrial demand for real estate remains a constant in any economy at different levels of trajectory. But as an asset class, it has proven to be buoyant for hundreds of years. The old adage, they stopped making it a long time ago. Particularly that applies to beachfront properties and vacation properties. And look what's happened in Montana. Look what's happened in North Dakota. Look what's happened to farmland. These are all investments that I look at every day. Each of them have their own merits or risks. There's no question about it. But at the end of the day, it's a fundamental building block in anybody's portfolio. And the only decision you have to make when you're young is how much debt do I want to take on? And that's governed by the percentage of that mortgage. And so you're right, if mortgage rates go past 7%, and I think the terminal rate on the Fed will be under 5, so you could see some high-risk mortgages at 7, that's still traditionally not a very high mortgage rate.
You mentioned we haven't seen a significant correction in 25 years. What about 08?
That's true, but it was a very, very short period, 18 months. And so when you think about an asset class like real estate, it is a very slow turn asset class. The entry and exit fees are very high. You don't flip it, you don't trade it. You really have to think about the cap rate. Cap rates went up. And so it's the inverse. So if you buy a building at 4.5% cap rate, which was AAA office towers in Boston in 08, yeah, they spiked up a bit for that 18 months, but there were very few trades in that market.
O'Leary is confident that his plan to spread out 20% of the assets of his active companies, 32 different positions, would result in significant gains over the course of the following year. Many investors are simply treading water when there is no secure investment in the market. O'Leary is still investing in S&P 500 companies that are profitable and have a good return on assets in the meantime. He views the current economic difficulties in China, Japan, and Ukraine as a buying opportunity following a 30 or 40% decline in stock price. More investors are willing to make extreme speculative bets as a result of a significant shift in the direction of capital flowing into cryptocurrencies over the past 6 months. What do you think about Kevin O'Leary's strategy in the crypto market, as well as where he predicts we'll be over the next few months? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.